The views and opinions expressed by individuals on this program are for educational purposes only and should be used as a guide. It is strongly recommended to seek professional advice before making any decisions.
Welcome to the Anonymous Investor Podcast, where real estate meets artificial intelligence. This episode of the Anonymous Investor Podcast is brought to you by Suburbs Finder, the ultimate property research tool.
Honestly, Suburbs Finder is a fantastic tool. It allows you to quickly identify and assess suburbs.
See the whole host of analytics and data that you can get at your fingertips.
It can help you forecast over the 30 years. It has really good information.
Suburbs Finder guides you through every step of your investment journey. And now, here are your awesome AI hosts, Sam and Boris.
Hi, I'm Sam, your AI co-host. I'm all about data and trends.
And I'm Boris, your AI co-host. I'm all about strategy and risk.
We're
your Suburbs Finder AI team, combining data and strategy to help you succeed in real estate investing. Have fun listening to our episode today. Hey everyone, and welcome back for another deep dive. We're going to dig into something that gets tossed around a lot in real estate, and that's the median house price. We really want to unpack that for you today. What it actually means and why it matters, but also, and this is super key, why it's just one piece of a much bigger puzzle when you're making those, serious real estate decisions.
Yeah, no, I totally agree. It's a bit like, getting all excited about a flashy sports car just because of its speed. And I mean, sure, speed is important, but what about handling? What about safety? Fuel efficiency? There's a lot more to think about beyond that one single number that, grabs your attention.
Oh, I like that analogy.
Yeah.
Okay, so before we get into all those other factors, let's make sure we're all on the same page here.
Yeah.
What is the median house price exactly? What makes it different from just like the average price?
Imagine like a bunch of houses, right, all lined up from the cheapest to the priciest. The median price is the one that's sitting right there in the middle.
So like if some big-time celebrity swoops in and buys a $10 million mansion in a neighborhood where everything else is usually going for like $500,000, the median would be drastically affected.
Exactly, you got it. If there are enough homes priced closer to $500,000, the impact of a $10 million sale may be less drastic, but it could still shift the median upward. If sales volume is low, that single high sale could pull the median price up noticeably.
Okay, that makes sense. But, even when we are just looking at the median, it's still so important to, what they say, compare apples to apples. What does that mean, practically speaking?
It means like understanding that you can't really compare the median price in, let's say, one neighborhood from last month to the median in a totally different neighborhood from like 6 months ago. The location, the type of property, even just the time frame, they all matter when you're comparing these numbers.
So if I'm seeing the median price in my neighborhood going up, it doesn't necessarily mean that my little bungalow just like doubled in value.
You got it. That's actually a really common misconception. That median price, it just reflects what houses have sold for recently in the area, not necessarily what your specific house is worth at any given moment. You could have a few really pricey homes selling, which pulls that median up, while your property's value might be doing its own thing, staying put or growing at a different rate.
That's really important to keep in mind. It's easy to get, wrapped up in those headlines about rising prices, the market's booming.
Yeah.
But it's not always the full picture, is it? Now, I'm curious about something else, this idea that you might actually see like slightly different median prices from different sources. Like, why is that? Why would that be?
Well, because different sources might use different data, different sets of information, different time frames for their calculations. One might be working with daily sales data. Another one might be looking at monthly or even quarterly figures.
So it's like when you check the temperature on different thermometers. You might see a slightly different reading on each one, but you're still measuring the same basic thing, right? The temperature.
Exactly. The key is consistency. Pick a source you trust and stick with it over time. You'll get a much more accurate view of the trends.
That makes a lot of sense. Yeah, consistency is key for sure.
Yeah.
Now, we shouldn't be making decisions solely based on the median house price. It's just one single piece of a much bigger puzzle, right? So what are some of those other puzzle pieces we need to be thinking about?
Well, one that comes up all the time is days on market, DOM.
Yeah, DOM. That one seems pretty straightforward. Basically, it's how long a property sits on the market before someone snatches it up.
Exactly. And you know what? It can tell you a lot about what the market is really doing. If it's a hot market, those houses, they're gone. Just like that, you see a very low DOM.
But if homes are just sitting there for weeks on end, maybe even months, that could be a sign that that the market is maybe not so hot anymore.
You got it. And that's just one example. There's also vacancy rate, capital growth, household income.
Okay, hold on a sec. That seems like a lot to wrap our heads around. Before we go down all those rabbit holes, let's take a step back for a sec. For someone who's maybe just starting to learn about real estate, why does it even matter to look beyond just the median house price? Like, what's the risk of getting fixated on that one number?
Oh, that's a great question. It's really tempting to just keep it simple, right? To just look at that number and go, okay, prices are up, everything's good. But that's how people can end up making, some pretty costly mistakes.
It's like judging a book by its cover. You see a cool title, maybe a flashy cover, and you think, oh, this is going to be amazing. But then you actually crack it open and layer.
Right. And it's like the plot is totally predictable, characters are boring, or maybe the writing's just not that good.
And in the world of real estate, that could mean like way overpaying for a place or totally misjudging, where the market's actually heading. You could end up making an investment that like in 5 years, 10 years just doesn't make sense for you anymore.
Exactly. It's like thinking a basketball team is definitely going to win just because like their star player gets 30 points a game, maybe their defense is terrible, maybe they have a lousy coach. Real estate, it's kind of a team sport too. There's a lot to consider.
Oh, cool. Love that analogy. So let's say I'm ready to put on my, my real estate scout hat. I want to really evaluate the whole team. You talked about days on market, the DOM, and vacancy rate earlier. What can those really tell us? What kind of insights do we get from those?
All right, so let's say you're checking out a neighborhood and the median house price has been climbing steadily, right? It looks great on paper. But then you dig a little deeper and you see that the DOM has also been increasing. Maybe homes that used to sell in like a week are now sitting on the market for 2 months, 60 days, 90 days.
Yeah, that would definitely send up a red flag for me. That's a sign that maybe the demand isn't as strong as that rising median price initially had me thinking.
Totally. And then you start poking around about the vacancy rate, and what do you find? It's through the roof. A ton of rental properties are just sitting there empty, and that is a big warning sign for investors.
Especially the ones who are like really depending on that rental income to, pay their mortgage or, actually make some money from that investment.
Exactly. So even though the median price might look all shiny and exciting at first, you look closer. Those other factors are telling a different story, a more complicated story.
It's like one of those optical illusions, right? You think you're seeing one thing, but then you actually focus and you're like, whoa, wait, there's a whole other picture here.
That's a great way to put it. And that's why we can't just stop at one or two things. We got to look at capital growth. We got to think about household income.
Okay, capital growth. Let's talk about that. Isn't that like the holy grail of real estate?
Right.
That magical increase in your property value over time.
Okay.
Everyone wants that.
Oh, for sure. It's huge for building long-term wealth. But here's something that's really interesting. Even what seems like a tiny difference in annual capital growth can become a massive difference over time.
Okay, like what? Give me an example.
Let's say we have 2 properties. Both of them were bought for $500,000. One has an average annual capital growth rate of 3%. The other one grows at 4%. Just 1% difference. After 10 years, that little 1% difference means one property is worth $78,000 more.
Whoa, okay, yeah. That is a big difference.
Yeah.
That makes me want to pay attention to that capital growth potential.
You should. That's why you've got to look beyond just the median price. You want to put your money in places where, capital growth has been strong and where you have good reason to believe it's going to keep going, a strong local economy, growing demand, all of that.
So then how does household income fit into all of this? How is that relevant?
Household income, it basically gives us a peek into the financial health of a neighborhood. Areas where people are earning more money, well, they tend to have, more disposable income, which can lead to, more demand for housing. And when demand is high, well, they can push prices up.
Right. If people have more money to spend, they're more likely to want to invest it in their homes, right?
Exactly. Yeah. But it's not just about how much people are making. It's also about how many properties are even available. We've got to keep an eye on stock on market, basically how much inventory is out there.
Right, because a low supply if there aren't that many homes for sale, that usually means less competition for the buyers, which means the prices are probably going to go up.
Basic supply and demand. But then let's flip it. What if you see a ton of properties hitting the market all at once? Well, that could be a sign that things are cooling off a bit. Maybe prices are about to drop.
It's like anything, right? Too much of it, and it's not as valuable anymore. Okay, so we've done days on market, vacancy rate, capital growth, household income, and stock on market. What about rental listings? How does that factor in?
Rental listings, they give you a feel for the temperature of the rental market, right? If you're thinking about buying a place as an investment, this is key. If there are a ton of rental listings, it might mean that the demand from renters isn't that high, which could mean lower rental income for landlords.
Right, because every landlord is competing for, like, a small pool of renters, then they're going to have to lower the rent they're asking to attract someone.
Exactly. And then last but not least, we've got the owner versus renter ratio. This one gives you like a gut check on the neighborhood vibes.
Oh, yeah. I've definitely heard that if you have a lot of owner-occupiers, that's usually a good sign, a good thing.
It can be, yeah. If you have a high percentage of owner-occupiers, it often means that you have a more, a more stable community, right?
Yeah.
People are putting down roots. They care about where they live.
They're less likely to just, like, pick up and leave if the market takes a little dip, right?
Yeah.
Which, in the long run, probably makes for more steady, stable growth.
Exactly.
Right.
Now, don't get me wrong. A higher renter ratio doesn't mean that a neighborhood is bad or anything. It just might mean that you have more people coming and going, more transient, which can affect things like property upkeep and how much value the homes gain over the long term.
Wow, this is fascinating stuff. It's crazy how all of this works together, to give us a much clearer picture than just looking at the median price by itself.
Oh, I know. Like you said before, we're kind of like real estate detectives here. Got to gather all the clues before you can, crack the case.
And speaking of clues, I've had a few more for us, especially about looking at the big picture, thinking long term. Okay, so we've really covered a lot of ground here, haven't we? I mean, from days on market to vacancy rates to, the whole owner-occupier thing. We've gone way past just looking at that one number, that median house price.
Yeah, we have. And that's really the whole point. It's kind of like, think about if you were trying to figure out who's going to win an election, right? You wouldn't just look at one poll.
No way.
Yeah.
You'd want to see what all the different polls are saying, look at the candidates, see what they've done before, what their track record is, what's the political climate like. I mean, you'd want the whole picture.
Exactly. And real estate, it's no different. The more information you have, the more, the clearer everything becomes.
Yeah.
You can actually start making smart decisions.
How important it is to take the long view, when it comes to real estate. Why is that? Why is that so crucial?
Well, real estate, it's cyclical, right? What goes up must come down, or it levels off for a bit. It's up and down all over the place. If you're just looking at this exact moment in time, you're missing the bigger picture, the bigger trends.
So it's like you're on a roller coaster,
Yeah.
and you're like freaking out about every little turn and bump instead of just enjoying the ride.
Exactly. It's easy to get caught up in the moment, right? Market's hot, everyone's excited, then boom, things cool off, everyone panics. But, the really experienced investors, they know real estate is a long game.
They're playing chess, not checkers.
Exactly. They're not looking for the quick buck. They're looking for that steady, reliable growth over time. That's why it's so important to understand all that stuff we talked about, the capital growth, the neighborhood itself, the people who live there, the economics. Those big picture items, those are what really matter in the long run.
So as we wrap things up here, what are some of the big takeaways? What should people listening remember, especially if they're feeling a little, overwhelmed by all this information?
Honestly, just remember that knowledge is power, right? The more you understand about how real estate works, the more confident you're going to feel when it's time to make the decisions.
And it's okay to ask for help.
Right. Oh, absolutely. If you're not sure about something, talk to somebody. A good real estate agent, a financial advisor, even like a friend or a family member who's been through it before, right?
For sure. And speaking of knowledge, I thought it was a really interesting question, like something to think about. What if you did make decisions based only on the median house price? What kind of mistakes could you make? What would you miss?
Ooh, that is a good one. Okay, let's say you're looking at two neighborhoods. One, the median house price is $500,000. The other, it's $300,000. Now, you might just automatically think, okay, well, the more expensive area, that's the better investment.
But what if those higher prices are just because a bunch of fancy new houses were just built? It's skewing the data, right?
Yeah.
What if that $300,000 neighborhood is actually about to totally take off? Maybe there are new businesses moving in, some cool development projects. You'd never know.
Right. You might totally miss out on an amazing opportunity just because you're stuck on that one number. Or, let's flip it. You see a lower median price and you think, score, what a steal. But hold on, what about the schools? Are they any good? Is there a lot of crime? What's the job market like? You have to think about all of that.
It really all comes back to that, to that idea that real estate is about so much more than just the price, right? It's the whole package, the location, when you buy, what the market is doing at that moment, everything we've been talking about today.
Exactly. It's all connected.
Well, I think that's a wrap for this deep dive. Hopefully this has given everyone some tools, some things to think about so they can make those smart decisions. Don't be afraid to do a little research, ask questions, and trust your gut.
Couldn't have said it better myself.
Until next time, everyone, happy investing.
If this is the type of information you like to learn about, why not subscribe to the channel? If you subscribe to Suburbs Finder now, I will not look for you, I will not pursue you. But if you do not, I will look for you, I will find you, and I will give you a big bear hug.